What's going on, guys? So now, is it time for a breakout? Are the market setting up for the next leg higher? If you guys didn't notice today, the Dow was very close to breaking above its wave one high. So what we're going to do here in this video, guys, we're going to take a look at the SPY to understand if the SPY, the Qs, SMH, IWM, if they're going to follow suit. All right. Will the SMH recover? Will the SPY continue its momentum to the upside? So before we dive into the analysis, guys, consider subscribing to the channel. Give this video a thumbs up, as you know it'll help the channel grow. Thank you so much for doing so. As an alternative, if you guys are interested on everyday Elliott wave analysis and updates, consider joining Trending Waves. The link to the Discord group will be pinned down in the comment section. So look forward to seeing you there. Now, the SPY here, which is the first chart we're going to review, our main count is showing that from an Elliott wave standpoint, right, we have progressed and completed the wave 2 at the support between 438 and 432, right? This represents a 50 to 61% retracement of this entire rally. That is a pretty appropriate wave 2 pullback. Now, remember this. I've been saying this in the channel. Zigzags are designed to go a bit deeper correction after the wave 1. So wave 2s normally have zigzags. And that is because after a big rally, when you get that pullback, it discourages traders as you know, if you're long in the market, it'll discourage you the deeper it goes and make you believe that your conviction is wrong. Now, so far, based here on our analysis here at Trending Waves and in the channel, we have been spot on here trying to track and understand that the support zone between 430 and 42 was an area of interest for the bulls to push the market a bit higher. Okay, now levels to watch to the upside, so that we can start contemplating with the idea that this is going to start resuming to the uptrend, all right, to the upside rather, is 448 is our first level to break. 451 is the next level, and ultimately the 786 at 456.38, 456.30 is the last level of resort for us, for the bulls, to show that we are actually trying to break to new all-time highs. Now, the way I want to see that structure unfold is that so far we only have evidence of, you know, if we dive down to the 5-minute time frame, or 15-minute rather, we do have small evidence of a 5-wave progression, right? We have 1, 2, 3, 4, and 5 truncation, or if you want to look at it from here, right, we have 1, a deeper 2, 3, 4, and 5, then ABC pullback, right? This is just, you know, I don't like going down to this type of time frame because the wave structures can morph into different types within the smaller degrees, but for now, this is what I'm seeing. So what if this is the wave 1, all right? What if this is the wave 1, pull back into 2, and if we continue higher, breaking these levels that I just mentioned, okay, breaking the zones, then it is likely that we are going to then see a wave 3 pullback into the wave 4, right? I'm mapping the scenario that I'm looking for, okay? So this will be 1, this will be 2, the 3rd, the 4th. This will be our zone of confirmation, because we will not want to see price action break above its wave 1, okay, based on Elliott wave guidelines. So again, let me repeat, if this is in fact the resumption to the upside, we want to see markets, if this is 5 waves to the upside, we want to see markets hold the wave 1, the wave 2 pullback, not continue to break into new lows within this structure, which is, if we do, it's okay, but we don't want to continue lower beyond this point, okay? Then we want to see the 3rd wave up. We'll get confirmation in the 3-wave pullback. Okay, we must maintain this high at 447, and then we go. Okay, that'll be confirmation. Now, in the event we start failing, okay, in the event we cross below this line, if it maps out the way I've interpreted it, then we have to go back to our alternate count. And our alternate count will suggest that that zone, let me turn back on the 786, right, that this zone is going to be our resistance and is going to be the wave 2. If this is the wave 2, okay, if this was the actual wave 1 of wave C, let me zoom out to the 1-hour time frame actually. Let me adjust the scale, my apologies. So if this is the wave 1, pull back into 2, we'll know soon, right? Because if we're looking at it from a higher perspective in the time frame, we have the A wave, the B wave, then the C, okay? And then we go to the downside. So how do we confirm this structure here? We confirm the structure if we break above this zone, below that zone, and ultimately this area here. So this is critical to watch. anything between 435 and 447 is of interest. All right, guys, so consider that, take a look at it, understand your fib levels and resistance for the retracements, and you'll be good to go. All right, guys, hopping over to the Qs. The Qs, you know, I'm not a fan of much deeper corrections to the wave 2, but again, they're designed to fool you. It's not looking too well here, actually, right? We held resistance at 347, and this is not looking pretty accurately to the upside. All right, even if we go down to a 5-minute time frame, we can see 5 waves up, a little bit more clear than we did in the SPY, right? And that we have 1, 2, 3, 4, and 5, but then this is a very deep correction into wave 2 of the small degree. All right, I'm not a fan of this pattern being developed as it is, but we'll wait and see. Tomorrow, or coming into the end of the week, we want to see price action remain north of 335.85, which is the low of wave C. Okay, guys, so back up to the 1 hour time frame. If we hold the zone as I suggested here, and we keep on breaking higher, let's retrace what levels to look for to the upside. All right, and we must maintain north, and we must break above. So the 50%, 353, 357, and 363, these 3 zones we must break above. All right, so I want to see the markets do this: 1, 2, 3, 4, and 5. Maintain this high, 3-wave pullback into the 2. So this will be 1, 2, and 3. Okay, around this zone is where we should consider the possibility that the markets are going to start trending higher. Now, taking a look at the Dow, you know, it's positive. I like price action out of here, but you know, if I'm looking at this from one thing I've been saying is that, yeah, wave 2s, we have zigzag corrections, but unfortunately this may unfold into a flat where this is the A wave, the B wave, and then the C. So we may get a leg lower if we don't break this high. All right, we may get the next leg lower depending on how this structure unfolding. But as you can clearly see here, we have 1, 2, and 3. We still just have evidence of 3 waves. So if we get a small pullback, look, because if I do an extension from 1 here, from 2 here, right, we've already surpassed the 100%. So we can technically start calling this as the wave 1, 2, and 3. All right, so levels to watch is a break above the wave 1. If we see price action breach the zone, then it is likely we are still in a correction. But what I like about this chart, guys, is that I've been mapping this correctly. So I've shown you that we have this trendline resistance, right? We confirmed it back here on January, rejected back here in February, broke above it here in March, retested it twice, almost twice here to the T on April the 7th and the 11th, all right, in the wave 1 and then the wave 2. 50% retracement support, confluence with the trendline support, a good argument to be made that the markets are trying to head higher. If we break higher, then the 370 in the Dow is not out of the question, which will take out the previous all-time highs. All right, guys. Taking a look at the SMH, SMH has recovered, but is still a bit of concern. If you guys remember, we noted that the 50% or 353 and 256 were of interest. We spot on hit the 253, and now we're selling a bit. All right, if this is the wave 4, all right, remember, we have to maintain south of wave 1 at 261.74. If that's the case, then we may see a leg lower into the wave 5 or wave C or wave 4 down towards the $223 region before we can consider the next leg higher. Otherwise, if we continue higher and we break above this, then we may consider the fact that this is the wave 4 completed. All right, and then we'll relook at that wave structure. And last but not least, taking a look at IWM. IWM seems to be recovering slightly well. I'm gonna go up to the daily time frame, but again, I'm going to repeat this numerous times until we break above this enormous zone of resistance. I will not entertain this as the resumption to the upside, but rather this is the WX and 1, 2, and then the next leg lower into the C of wave 4. All right, guys. So thank you so much for tuning in. Really appreciate all of you. Thank you so much. Again, join Trending Waves. The link to the Discord group will be pinned down in the comment section. See you guys tomorrow. Good luck.